It's always a bad time in the world economy, and whenever you read the news, there's always something going wrong that it seems like investing is a risky game to play. When interest rates are higher or lower, oil prices are getting expensive or cheaper, stock prices are going up and down. Apparently, it's a bad thing when anything, like inflation, is moving in either direction. So you start to realize that people or news article writers love to think everything is bad. But all things considered, for myself and everyone, the only regret that makes sense, I think, is not buying more. And as easy as it is to say, very few people actually do anything about it, even though it's the only statement that makes sense after 100 years of stock market existence, which includes many years of different stock market crashes, diseases, political issues, and simply tens of millions of people naturally dying every year around the world. After investing for some time, you realize that good investments are only sold at good prices when they've made a temporary mistake or the rest of the world is scared and panic selling. But because those moments are also when things happening in the world are most uncertain, you'll often feel pretty alone when no one else wants to buy anything. But when you talk to other investors, I've never heard of anyone say they regret buying simple yet high quality investments like Disney, Walmart, Visa, Apple, or McDonald's after owning their stock for 10 to 20 years. They're not the most fascinating investment ideas, but it's the simple and good quality names, most of which you already know of, that have already risen by roughly 3 times the original value, if not more, this decade. So as long as you buy something of high quality that has the potential to grow, and you have the patience to wait for it without selling, then you won't regret buying more. Sure, you could buy today and it could drop 10 to 20% next month for whatever reason, but the big picture is to hold up for the 300 to 1000% home runs in the long term, as if you were buying a house. For example, if houses were selling for $300,000, but in 10 years you expect it to be worth $900,000, wouldn't you buy it right away? Actually, wouldn't you try to buy all the houses in sight, like Monopoly? So the real goal should be investing as much as you can, as early as you can. But obviously people are limited by how much money they have to invest. So the next best move to make sure you don't miss out is to ensure that you have ample savings and to follow a strategy called dollar cost averaging. The strategy is essentially where in the stock market, whenever you receive additional funds, you're constantly buying an equal amount every month, regardless if things are going up or down, to ensure that your portfolio is consistently being invested. This way you're capturing all the good times as the markets keep marching higher and bad moments when the markets are cheap from time to time. You'll notice that for most people, they'll be buying the latest crash, selling the rebound, and then repeating the process, all for some quick gains. Imagine if someone successfully did this every recession and made 30% gains each time. Then after 12 times this last century, they would have multiplied their money by 23 times. But why take the risk of doing this when you could have simply bought in early at the cheapest price available to you, which means the present moment, and ride the long-term wave up? Doing so would have multiplied your money by 150 times this last century. The saying is time in the market is better than timing the market. When you invest, you can't expect to win right away, but if you have time on your side, then you'll be just fine. So that's all for now. If you enjoyed this video, like this video and subscribe to my channel. Let me know in the comments below what investments you're holding for the long term, and I'll see you next time.